Okay, so first of all, thank you so much everyone to join this beautiful session. And this session is all about market backtesting, and there is no weekly analysis or anything, right? In this webinar, we are going to do some backtesting, and after that, I will choose your question answer one by one. Let's see how many possible your question answer. I will try to provide your most requested questions and their answer. Okay. So which pair you would like to backtest today in this webinar? Okay. AU gold, US30, GPUSD core, Aussie chief, gold, GPUSD, Euro USD gold, GP, JPY, Bitcoin, Euro USD, Indian market stock, Bitcoin, Euro USD gold, Euro USD gold. Okay, no problem. There are so many different pair. Let's check any one. Okay. Okay, we are going to start the what goal, and the next probably in the next upcoming public weekly webinar where I will do back testing, so we can cover a different pair like Euro USD, GBP USD, any other pair. Okay, because gold are most tradable pairs, so that's why people mostly trade in a gold, and the principle to apply the same theory will be applicable in different time frame and all pairs. Okay, all right. First of all, before to start a back testing, let me explain a few more things that how structures work and when we can identify investment and our PY and how we can take a lower time frame entry. That's important thing. Before once you understand that how things actually work in, then same thing you need to apply on chart. Then you can understand more better that. Okay, so let's see and what happening like when market momentum is bullish, then how things actually working and what kind of thing you need to understand right here. Okay, so you can see when market momentum is bullish and creating higher high is here, and then what happened when market momentum is a higher high and creating move something like this right here. And then what happened at this point? Finally, market take the previous low. That's called inducement, as you know, right? If you don't know, then you need to understand that if market momentum is a bullish and creating higher high and market take the previous low, that's called inducement. And then what happened? Market push higher and again take a pullback and then again continue go higher high, again take a pullback and again take a higher high, right? So in this case, you can see market momentum is completely bullish. Everything is a bullish here, right? So if everything is a bullish here, so how you can deal, right? In this scenario, how many possible entries are possible here? If I explain you here, you can take a 2 or 3 types of entry applicable here in this structure here. Where let me understand this one. This is our previous low. If market taken out the previous low, in that case, you need to understand that if market taken out the previous low, and maybe market can close below it, and maybe market like just sweep this low, right? Again, go higher, take a pullback, and what happened here, and what are you looking here? Probably you can buy here on the pullback mitigation here, and this one is our next entry here. And what happened, another one is here, the next attempt go higher, again take a pullback and wait for mitigation, market mitigate this zone here, and once market mitigate this zone, we can also buy here. So in this case, you can take 3 entries are available in this move right here. And if you are if you think that why we don't need in this point at this point and at this point, because market already taken out the liquidity, which one is here? So once market taken out the liquidity investment and market take a pull, like going higher high, take a pullback and mitigation, we can plan here for the buy to the upside right here. Okay. Again, same thing happen here. Market going higher high. If market going higher high, then what happened? Market take a pullback and mitigation at this point and push higher. So this is our possible scenario here in a bullish momentum, and same thing applicable in a bearish market. If market momentum is a bearish and taken out the previous high and push downside and wait for mitigation and then sell. So this is our scenario. Then how you can deal in that situation? If market momentum is a bearish and taken out the previous high, that's called inducement, liquidity grab here. And this zone, entire zone act like a high probability. And this can be your order flow and can be your order block, right? But main thing is our order flow. Order block is not primary. Order flow is our primary after taking out the inducement. Okay, you don't need to use any other thing. You need to use very simple thing: structure, inducement, and entry. Simple, right? And you don't need to focus on any other thing, because mainly focus to provide like structure liquidity, which is very common, and most probably you will see that when market momentum is like going higher high and lower lows, market taking out the previous higher low, and then market went down and upside, right? This is a very simple thing you can use and you can trade very simple way. Okay, let me show you on chart, then you can understand more better that how things actually working here. Okay, so this is our gold chart here, and you can like backtesting like any time frame, like 15 minute, 1 hour, 5 minute time frame, and any other time frame, right? It's totally depend on you that which time frame you would like to like backtest in this webinar. And also one more thing is here, you need to follow the simple structure like pullback structure. You don't need to use like inducement structure, as we have done in a previous videos, some videos that market, if market going higher high and market taken out the inducement, this is our higher high confirm, market take push downside, wait for PY mitigation, and then market going higher high like this one. Okay, break the structure. Again, we are waiting for taking out the inducement, probably taking out this one, push downside, and again going higher high. This is another higher high, higher low. So this is our structure here, but you don't need to follow this structure. You need to follow the very simple structure as I mentioned. This is our higher high like this one. If market broke this low, that's called inducement. In a first attempt, this one is called inducement. Maybe market take this one and again push downside. So in this case, what are you looking here? If market went high, taken out this one and push downside, we are looking for the sell. That's it. You need to follow the simple structure. You don't need to follow any other thing. Okay. Okay. So this is our structure here in a 15 time frame. You can use 5 minute time frame as well as a 1 minute time frame, and also you can use 1 hour time frame. It depend on you, totally depend on you that which time frame you would like to backtest and trade. Okay, because you like some people like have a very good time to trade on that time, and some people don't have enough time to trade in a higher time frame. That's why. Okay, so this is our 15-minute time frame, and you can see the market momentum is a bullish and bearish and bullish and bearish. Simple, you need to follow the simple structure. You don't need to follow the like complex structure as well as here. Okay. So right now you can see this is our current price action is here, and what happening here. If you can like mark anywhere like for I'm just marking a random number is here that where is market going on and how you can deal in that situation, right? So if market momentum is a bullish and market taken out the liquidity and taken out the investment, we are probably looking for the like buy and sell. Look at this one, and this is our structure. You can like use any other one like here and here, anywhere, right? This is just like random. Okay, so in this case, look at this one. First of all, understand this structure here. What happening here? If market taken out the investment and sweep the investment, we can sell. If market sweep the investment, we can also buy. Okay, it depends on the structure side, like market is a bullish or bearish. So this is our current situation here in a gold in a 15 time frame. And what are you looking here right now? The market momentum is showing like bearish. If market momentum is showing bearish and taken out the first pullback is here, which one is here? And then we are looking for the sell, push downside, break this one, mitigation, and then again sell. That's it. Because market momentum is a bearish. So if market momentum is a bearish, taken out the high, push downside, pullback, mitigation, and sell. Right. So right now the market momentum is a bearish, and what are you looking here? If market momentum is a bearish, and probably we are looking for the sell at this point, because overall things are bearish here. Okay, and also you need to understand where is our minor structure and where is our like major structure. This is also like main thing is here. If market like a like push like trading between the high and low, any major high and low, and that's called internal structure. And if market break the previous high or low, like main high or low, that's called major structure. So in this case, where is our minor and major structure? The previous high or low, that's called a previous low is here. And where is our higher high? Sorry, lower high at this point, because overall market scenario is a bearish. Right here, this is our previous structure, broken this one. And after broke this low, what are you looking here? Simply, we are looking here for the sell, because overall market scenario is a bearish. So if market scenario is a bearish, simply we are looking for the like sell here. Where is our next PY and when we can expect that market is trying to go like push downside. So in this case, you can see this is our unmitigated order flow is here. Which one is here? It means that if market tap on it and create any bearish indication, probably we can plan here for this sell because this zone grab the liquidity. So if price grab the liquidity and price tap on it, we can sell, right? This is a very simple thing is here. Right here. Market taking out the liquidity, and after taking out the liquidity, wait for price mitigation, and this is our order flow because this one is our last buying momentum before this drop is here. So once price tap on it, we can plan here for the sell. Simple. Okay. So how you can deal in that situation? And one more thing is here, if price tap on this like higher probability order flow, you need to check here a lower time frame refinement order flow to get more better entry for the sell. If price tap on it and not create any lower time frame reversal, then you don't need to enter for the sell. Also, you can plan for the buy if price multiple times like fail this setup is here. Okay. So let's see and switch here in a 1 minute time frame to see exactly where is our refinement order flow is here. Look at this one. Where is our refinement order flow? The last buying momentum before the sell. In this case, you can see here, this is our actual last buying momentum before the sell, and which one is also unmitigated here because the proper imbalance, there is no mitigation here, not mitigated by any valid pullback. And before this move, you can see all order flow is mitigated. Like for example, this one is also mitigated here, right here. And this one also mitigate here, and this one is also mitigate here, and this one is also mitigated. It means everything is mitigated. So if everything is mitigated, simply you need to understand where is our unmitigated order flow. So this one looks unmitigated here, and if you refine here like over refinement, and also you can use this also as a PY, and this one is also a PY right here because this is a zone when we are expecting that if price tap on it, we can plan here for the sell. That's it. Okay. And before this mitigation, if market create here any bullish structure here in a 5 minute time frame, in 15 minute time frame, so we can plan here for the buy. So for the short term move is here, right here. So this is our zone when we are expecting that if price tap on it at least, because this is a over refinement is here, refinement of the refinement structure. So this is our 1 minute order flow is here. So before this mitigation, if market create here any bullish structure like here, like this is our bullish structure, taking out the high, sorry, low, take a pullback, mitigation, and create here any lower time frame confirmation, we can buy here. Again pullback, we can again buy here till this mitigation here. So if market take another pullback here and you are trying to buy here, so this is a not buy here because this is our unmitigated order flow is here. And so this low act like a inducement, tap on it, create lower time frame reversal, we can buy here, right? So this is a process. This is an internal structure process, right? But when price tap on the refinement of PY and create any reversal indication, like for example, if price tap on it like this one, okay, once price tap on it, so what are you looking here? Simply market must be creating a structure like break the low, and after break the low, taken out this high, push downside, take a pullback, mitigation, and we can plan here for the sell. And this zone become high probability zone for the sell. Simple, right? Now let's see what happening here in a lower time frame and what we can expect at this point. Look at the structure here in a 1 minute time frame. I'm sorry, a 15 minute time frame to say exactly if market create here any bullish structure here, we can take risk here for the buy to the upside. Right now, what is structure here? Look at the structure here. This is a pullback like this one. Take this, another pullback is here. So if price, for example, this one is a broken. So pushing upside, we can plan here for the buy to the upside till this one because this is a bearish indication here. Overall market is a bearish. So once market mitigate this one and create any like various indication, we can plan for the sell, otherwise no, right? So let's see what happened next here and what we can expect here. If you're thinking that why this is structure, because this is a pullback here, right? Every pullback as a count as a structure here. Like let's see what happening here at this point. And right now you can see the market structure is a going upside, and market like tap on this one, pick the previous high, push downside, and let's see what happened next here after this one. All right. Market again push higher and break the structure here. And what are you looking here? Simply, if you can see here, the market momentum is a bearish, and if market momentum is a market momentum is a bullish, and if market momentum is a bullish and taken out of the previous low, we can plan for the like buy, like taken out the pullback and create any bullish structure, we can plan here for the buy to the upside right here. Okay. So let's see what happened next here after this one. And after that, what we can expect here. Market taken out the previous low here. And after taking out the previous low is here, we can plan here for the buy for the short term, not for the longer term. And remember this thing, this is a low probability setup for the buy because the price already tap on it. Okay. So once price tap on it and create here any bullish structure in a lower time frame as well as, then we can plan here for the buy. Otherwise, no. Okay. Because the market already tap on the higher time frame order flow. So price take a pullback, go higher and break the pullback like this one and push downside. Mitigation and then sell. Right. If not create like this structure here, so simply what we can expect? We can expect that price can continue go higher, taken out this one and continue going higher high. So this is a process how we can deal in that situation, and simply you need to follow the structure. And this is a 15 time frame. If I check here in a 15 time frame to 1 minute time frame and market create here any bullish structure here, so we can take risk here for the buy to the upside. This is our investment in a higher time frame right here, and 50-minute structures are taken out and you need to wait for it. There is unmitigated order flow available or not here, right? So in this case, there is no unmitigated order flow is available. Everything is mitigated here. So if everything is mitigated, simply you need to follow the structure here. Simple, taken out this inducement and price must be taken out the inducement, go higher, mitigation, and we can plan for the buy to the upside. This is a very simple like thing here when we can expect for the buy to the upside. Let's see. And what happened next? What happened here after this one, and how things actually working here in this case right here. Okay. So this is our structure, and this is our inducement, and follow the structure as well as here. So if market taken out the higher time frame inducement and create any bullish structure here as well as, right? So we can plan here for the buy to the upside. Look at this structure here. Inducement, and this is another pullback here, small pullback here, and a small pullback here, and create any bullish structure, then we can think about it buy here. Okay. So let's see what happened next here after this one and how things actually working at this point. Then we can decide where is market going on right here. Okay. And this is our previous inducement here, because in a lower time frame as well as, you need to wait for it to take out the inducement before, if you are looking for the buy to the upside right here. If no, then you don't need to buy or sell. Okay. Market just took the liquidity, I mean the inducement, and then market went up, and higher time frame inducement is also taken out. So if market taken out the liquidity, so we can plan here for the buy to the upside. Why? Because market take an inducement and went up, taken out this liquidity, pullback, mitigation, and we can buy here directly to pushing higher high. Where is our target? The previous main high right here. So where is our entry at this point right here? So we can plan here for the buy to the upside, and this is our entry criteria. Where is target? Target is here, and stop loss must be like should be below this low right here, which is around 3R is here, and max target is at this point right here, because this one is our refinement zone. Whereas where we are expecting that if press tap on it and create here any like bearish indication, so we can plan here for this sell. Otherwise, no. Okay. So let's see how structure is a work in a lower time frame. Okay. Market take a pullback and wait for mitigation. Okay. So press tap on it. So once press tap on it, so we can plan here for the buy or sell or no. So of course, this is a valid entry here for the buy because the liquidity is taken out, higher time frame and lower time frame structure shift, pullback, mitigation, and going higher high. Again, what happened at this point? This low is taken out. So once market taken out this low, we can plan for the buy. This is our zone. So if price take on this point, we can also plan for the buy because structure is a bullish and taken out the liquidity. That's it. This is a very simple process that how you can easily buy at this point. Let's see. Okay. Market again pushing upside, and one market momentum is a higher high, and you need to follow the structure. Same thing. Again, inducement taken out because this one is also a valid pullback is here. Inducement taken out. This one push higher high. This zone is a grab the liquidity, push again, break this one. And where is our BY? The last buying momentum before the selling momentum before the buy is here. This one. The last selling momentum before the buy at this point right here. Okay. So we can plan here for the buy to the upside. Where is our entry here? And where is target? Target should be this highest here. Where is stop loss? Stop loss should be below this low. And for the safety purpose, you can plot the stop loss just below it right here. So because the market can be pushed a little bit more downside to mitigate this order flow. That's why I'm putting the safer side as stop loss. But otherwise, if you can like put the stop loss, so we can also put the stop loss just below it, right? You need to like prepare in a both side of the probability is here. Okay. So what happened at this point? Look at this structure here. Market is up going higher high and wait for mitigation. Market already mitigate this one. And let's see what happened next here. Okay. Finally, market pushing upside. So if market pushing upside and take any pullback, and we can also plan for the buy to the upside is here, right? Because overall market direction is a bullish here and everything is a bullish. And this one is also one more like pullback is here. And we can plan for the buy here, and the target is here. Stop loss should be below this low. So this one is also because we don't need again inducement because market already pushing higher high after taking out the inducement, and this is also entry valid if market push downside to mitigate this zone, right? But market not create here, so market just taken out the inducement, push higher, break this one and mitigation and buy again, break this one, take a pullback and again buy here. So this is our zone when we can expect that where is market going on. Okay, so let's see what happened next after this one. Okay, market pushing higher high is here, and where is target is here. This is important thing is here, that if market, like if you can say the previous high is here, which is our main target is here, right? This is our target and this is our refinement of the, and majority of the position is a close here, or you can close the 50% of the position, and this is a refinement because the higher time frame is here, right? Let me show you one more thing is here, because this is a refinement of the higher time frame to lower time frame. So probably market tap on it and create here any bearish indication. So we can plan for the sell, otherwise no, because the overall structure is a bearish. We can think in a both side of probability, and this is our trade in an internal structure is here. Okay. So market just pushing higher high and finally market mitigate this one. And this shadow, like this candle mitigate our PY is here. So now again switch here in a 1 minute time frame because the price tap on it. And now we are planning here for the sell in a lower time frame as well as here. Why? Because this is a higher time frame. This line indicate the higher time frame to lower time frame refinement. And once price tap on it, we are planning here for the sell. So how you can sell at this point? This is a very simple thing is here. Like previous high is a sweep here. So if price sweep the previous high and broke the structure, take a pullback, we can plan here for the sell. This is a simple thing is here. Okay. And for example, if price close over it, so how you can deal in that situation, like close over it and pushing downside, taking out this one right here, we can plan for the sell, again take a pullback, we can again plan for the sell like this one, because this one is already grabbed the liquidity. That's why. Okay, so let's see what happened next here, and maybe market create here any opportunity or not. Let me check here. And if you are thinking at this point that why this happened here, because the inducement taken out and this our unmetered order flow is here. So if price tap on it, we can also add one more position here. Otherwise, no, right here. This one is our one more entry here. I think this one is not mitigated at this point, but this one is a miss by few micro pips is here, right? Otherwise, this can be another Y entry setup here for the buy till this high. Okay, price tap on it and wait for some reversal indication in a lower time frame. Then we can plan here for the sell right here. Okay. Okay. So at this point, just sweep this one. And after taking out the inducement, there is no immediate order flow or order block is available here. So we are not planning here for the sell. Price must be create a inducement, like break this low, taken out the inducement, either break this low, or maybe market must be tap on the unmetered refinement order block or order flow. So right now there is no unmetered order flow or order block available here. So we are not interested here for the sell at the point is here, right? So let's see what happened next after this one and what we can expect. Let's see. Okay, market trying to push downside. And one more thing I want to mention, like if market momentum is a bullish or bearish and market tap taken out the inducement or tap on the POI, but in a first time market not able to create any reversal indication and creating higher high, that means market are not interested for the pushing downside as you plan. Market looking for something new because market trying to go higher high and creating like higher high in a lower time frame as well as, and we can see some bullishness in a upside. So majority of the time, what I do in this case, like for example, if price tap on it in a first time market, not create here any bearish confirmation, because the this lows are taken out, push downside, pull back and sell, take a pullback, sell. This is a simple way to enter here for the sell. But in a first attempt, this one is a not break, sweep this one and just break the previous high. It means market are trying to pushing upside, and this is the indication that market looking for the upside. Okay, and if market create here any bearish, so you need to like wait for some clear confirmation before the sell here. Okay, all right, so let's see and how you can deal. Simple. Structure broken, taken out the inducement, push downside, break this one, pull back, and here. This area become high probability entry for the sell. Not this one, not this one. This area become high probability entry for the sell. And once price create this entry setup and then market pushing downside in a deeper way, right? So let's see what happened next and where is our next zone when we expecting this low must be like broke this one. So we can think about it next cell setup here. This one is a broken and you need to wait for it to taken out the inducement. So where is inducement taken out at this point? So after taking out the inducement, in this case, you can see market just sweep the inducement. So if market sweep the inducement, we can probably buy, sell for the at this point because there is no unlimited order flow is here. Even order block is available. So we can plan here for the sell for the short term at this point. Like here, we can also sell here and here we can also and put the stop loss just off it. And where is target? Target the main low is here because the higher time frame momentum is a bearish. So where is our low? This low, right? So probably we can see in upcoming like few hours, market can push a little bit a downside as we have planned because the higher time frame is also showing bearish and lower time frame also structure is showing bearish. But problem is here that market ignore the inducement and create this structure here, and this is a reversal entry for the sell as per the lower time frame confirmation. Okay, but if this low is a broken, like push downside and break this low and take a pullback at this point, and this entry is a lovely, and you will get very good trade setup at this point, and this area become high probability entry for the sell, not the at the current price action. This is a not high probability entry for the sell. Even the higher time frame is a bearish and tap on the higher time frame refinement. But problem is here that if market create this entry at this point, so this entry become more high probability because in a first attempt market giving bearish indication, but market broke the previous high and creating higher high in a lower time frame. It means market are not able to pushing downside. Market just creating liquidity for the before to push higher. So at this point, market pushing upside and we are taking again risk here for the sell because inducement taken out. If market not taken out the inducement, so we are not interested for the sell because the market create sweep the inducement. And let's see what happened next here. Market pushing downside. This area become now high probability entry for the sell. And remember, if you are looking for the buy and sell on any point, right? The probability of the buy winning and losing is a 50-50%. There is no like you can say if I mention that high probability, it doesn't mean that you will get a winning trade every time. Okay, because this game is all about probability. When you are looking for the buy and sell, and if you enter on any setup as per your favorite setup, as per your any winning strategy, but you need to think in a probability for the buy and sell because this game is all about probability. This can be lose, this can be like uh, profitable, hit the target, and maybe you will get a break even. So you need to prepare before the enter for the buy and sell. For example, if I enter here, so and you miss this setup here, and you can also enter at this point as well as there because we are planning here for the sell. As per my view, this is a my good entry for the sell, but problem is here. Only one problem is here that this can be a best trade for me, but problem is here that market not create in a first attempt. If market creates same setup at this point in a first attempt, so this become more high probability in at this time because market break again higher high is here again higher high. That means the sell side like indication is a little bit lower compared to the buyers. Okay, but we are not interested in buyer because the price already tap on the higher time frame PY. So that's why we are not interested at the point. Okay, but if market create any bullish confirmation in the lower higher time frame, so we can plan for the buyer sell. Okay. So let's see what happened next day after this one. Okay, market pushing downside and what happened after this one, and finally market hit our stop loss here. And if you are thinking why this is a stop loss, because this was a high probability. Yes, this one is our high probability, but The high probability doesn't mean that you will get a winning trade every time, because this is all about probability. That's why I mentioned this setup is failed here. Why? Because the scenario of the sell side is a looks good for the sell, but only one problem at this point, because market not create this reversal indication in a first attempt. Okay, if market create same thing at this point, so this become more high probability, and maybe market can like hit a stop loss. Okay, there is no guarantee that if you are putting any entry limit for the buy and sell, it doesn't mean that you will get a winning trade. No, it's all about probability. You need to think in a probability. But when you are looking for the buy or sell, simply ask yourself that the proper risk management, proper like your risk management and mindset, that like if you put any for example, if you put any number of stop loss, any number of amount stop loss, you put $100, $1,000, $2,000, $5,000, or any amount, right? So after that, what happened? Market hit stop loss, then you don't need to regret, because it's a part of the trading, right? And when you lose, then how much you lose, but when you make, then how much you make. That's important thing. Your winning trade never be less than the what you lose. Means the understand that your winning amount always the higher the losing amount. Okay, if you work on it, then definitely you can grow your account consistency, even if you trade based on 1:2 RR, which is very enough to become a profitable trader. It does not mean that you need to use like 10 hour, 15 hour, 20 hour trade. No, 2 hour, 3 hour is a very good deal, but you need to consistency focus on your system, that how things actually working. Okay, sometime you will see market just reverse from your target point, just few pip, and then market reverse, and sometime you will get a break even, sometimes stop loss, and then market hit target. So these things happen every day. Okay, all right. So I hope this will help you a lot to understand that how lower time frame structure shift here, and bullish structure is a work, and lower time frame structure where. And again, you need to switch here in a 15-minute time frame, because this one is a stop loss hit and market just pushing higher high. It means market are not interested for the sell side, right? So if market create here any bullish confirmation, so we can plan here for the buy to the upside. Okay, so let's see what's your question answer is here. Let me read your question answer one by one, because this is a key lesson and important lesson. I mentioned both things, like how things work in a higher time frame to lower time frame, and why setup fail and why setup win, because it's all about probability. If you win 2 trades and if you lose 3 trade, no, it's okay, because the risk reward is a matter here. Okay, now let's read your question answer one by one. Which is best pair for SMC? For SMC, you can mark any pair. Like it totally depend on you. Make video sessions, sir. I don't use I don't trade on a session timing. That's why, because my main focus to trade on structure, inducement, and PY. That's it. So if you understand the structure, inducement, and wait for some confirmation, which is very simple and very working for me. Okay, you don't need to make it very complex. How to calculate 2 hours? That's so simple. You need to apply the calculate risk reward tool. This is a risk reward tool. Now 2 hour. Simple. What is new? What about news trading? I don't know about fundamental how work, because the fundamentals during fundamental most of the time manipulation happen. So I mainly focus on technical thing. If structure showing bullish as per my view, so I can take risk for the buy. Okay, that's it. Simple. What is main technical? I follow the mainly structure, inducement, and order flow. And again, after that, market reverse to the upside. And if market reverse to the upside, taken out the inducement, we can plan here for the buy to the upside because the inducement sweep here. You can switch here in a lower time frame and you can buy here. Again, sweep here. And then we can again plan sell. Again, sweep. We can again sell, sweep and sell. And this is the internal structure. And this is happening between the high or low. So finally, market break this low. And after break this low, you need to wait for it to taken out the inducement, which is happen here and sell, push downside, internal structure, again buy here, mitigation, sell, take this low, again inducement, sell, fail, and again mitigation and buy. So this process will be continue, and you need to follow the simple structure as well as here. So do daily liquidity. So to you can use daily liquidity, session liquidity. There are multiple types of liquidity are available in the market, but you need to use where is our which is our most uh, high probability, like creating high probability liquidity. So majority of the time liquidity create on main high or low, because if anybody wants to buy and sell, then we are waiting for the break the previous high or low, sweep the high or low, breakout, trend line. So these things happen in a structure formation. That's why structural liquidity is a main liquidity in a market. How to find daily bus? Daily bus simple is here. Structure, find the structure. There is no, I follow the simple structure. Like the structure is a bullish or bearish. And if market creating lower lows like this one and pushing downside, this zone become high probability for the sell, because this zone grab the liquidity. That's why if market take a pullback at this point, sell. Again push higher, sell. This is simple. Again go higher in a first attempt, not create here, again going higher high. It means the liquidity is taken out, but market not able to push downside. It means market trying to push like downside and again go higher like this one. Structure shift here like this one. Simple. You need to follow the simple structure here. You don't need to follow the complex and okay. Can I share my screen to speak? No, sir. Right now we have a lot of hundreds of members already participant, so we are not able to. Mr. Khan, why don't you use session indicator anymore? I use like to mark sometime the session indicator is here. You can see, but session indicator is that it doesn't mean that like every time to you trade. Simply if you are able to, if you want to trade based on the session, so you can, because I mentioned recently that there are multiple types of liquidity are available in a market. You need to focus that which one is a suitable and working for you. For me, structure is a working for me, and I love to trade based on structure and inducement and order flow. How to calculate risk reward? For risk reward, you can simply use the trading, like I think in a baby pip calculator, where you can put everything detail like account size, how much percentage you want to take risk, and pair name and entry amount. Then you will get a risk reward that you can calculate the lot size and risk also. Gold next move. Gold next move is a bearish here, and price already tapped the higher time frame refinement. PY is here. I mark, so this markup here, this was our last buying momentum before the sell. Price mitigation pushing downside, and we are expecting continue downside till this low. Right. We explain sweep. For sweep, I already explained so many times. When market taken out the previous low in terms of the sweep, means the this one. Okay, by a shadow here. This one is a sweep here. That's called a sweep. In the previous high or low, is sweep something like this one. That's called sweep. This one is a sweep. This one is a sweep. right? What is MXMM? I don't know. Do more high time frame liquidity on time frame. Liquidity on. You can use 15 minute, 1 hour, 5 minute time frame as a higher time frame, and lower time frame depend on higher time frame. Like 15 minute and 5 minute, you can use 1 minute time frame, and the 1 hour has a higher time frame. 5 minute you can use lower time frame. Can you recommend 1 hour? No, sir. I think 1 hour is not a good deal because the probability of the winning is a 50-50%. Okay. So I don't think the 1 hour is more successful. If you go for it like 2 hour, which is very good, and if 3 hour is absolutely very good. So 2 hour, 3 hour is very good deal. 4 hour mapping. This is a 4 hour, please. Internal, external. I already explained internal and external everything. You can watch later. If you join, anybody join later, so you can watch after upload on the YouTube. Liquidity is splitting. Every main high low, that's called liquidity. Simple. If market is a bullish and taken out the previous low, that's called like inducement. And to taken out the previous higher low, that's called liquidity. Simple. Means the when if you are buying or selling, then where is the stop loss? You need to put the stop loss, the main higher low, the recent higher low. That's called liquidity. Simple. Liquidity is your stop loss. Or also where people are looking for the buy or sell. Means the when market break the previous high in a bullish market, then people generally looking for the buy on a breakout. That's simple thing. 4 hour bullish. No, 4 hour not bullish. 4 hours are bearish. Clearly you can see the market creating lower lows. Okay, so if there is any question, you can ask me here, and after that, I will finish the webinar. It is next move. No, sir. The no more analysis. I just explanation of the backtesting on a Bitcoin in a few minute entry. I explain because after a few hours, I have to go for the master class for the Discord members, community members. Can you make more video on order flow? I already make a video on about order flow. I make multiple videos on each topic, but I don't know why you are not. I think you are not watching them, and maybe you forgot them to watch. So maybe, but you need to again like scroll the chart, scroll the my YouTube channel. Then you will find a lot of very helpful videos. And also, I will make time to time new videos. 15 minute and 1 minute time frame. Yes, 15 minute is a high time frame and 1 minute for the lower time frame. What is masterclass? Masterclass, I'm hosting for the Discord community members where I explain all about the strategy starting to end, like to marking everything like structure, inducement, PUI, lower time frame execution, and a few more things. If the order flow is not just the how to deal. If not type the order flow, then structure will be shift. I will wait for the structure shifting, taking out the inducement and then sell. Simple. Don't buy or sell in a FOMO. Remember, like market is a bearish, like taking out the inducement, and this is our order flow. For example, here, and press not tap on it. Okay, and just push downside. So how you can deal? Simply wait for structure shifting, lower time frame shifting, pull back and sell at this point. Simple. There is no need to wait for mitigation this order flow. Best time frame also. There is no best time frame. It depend on you, totally depend on you. That someone is a 15 minute for west, someone is a 5 minute is a west. Okay. So it depends on you that if you are able to hold the situation in a 1 hour, then you can go for it. If no, then you need to go like 4 hour. If you are more aggressive, then you can switch 5 minute time frame if you are able to hold that situation. Otherwise, you don't need to switch in a lower time frame and very lower time frame to trade, because the higher time frame, little bit higher time frame and medium time frame is good for the starting. Next video, YouTube video. No, not now. You will get notification that what's our next video topic. The right now there is not fixed yet. Can I join masterclass? Masterclass will be available for the Discord community members, not for the publicly. What's time to trade Euro time? Mainly the volume generate in a New York session. So you can trade in a New York and London session, because at that time market create a lot of volatility. So you can trade on it. Gap up and gap boss, close below it that sweep. If close, that's called proper boss. If just create a shadow, that's called liquidity sweep. Simple. It is paid for Discord masterclass. This masterclass available for all paid members and nobody need to pay for them. Okay. But this is applicable for the Discord community members, not for the Telegram and YouTube like free members. Will you make a ICT course? No, sir. How to join your Discord? Link in description. You can check out. I want to private a one-to-one webinar. The one-to-one session and the one-to-one session, the seat already full. I already announced in a previous post on a Telegram. The all spot already filled, so you can try on a next month. Like 5 spot was I chose, and which was already filled in within hour. Okay, so now I'm going to finish the webinar, how to become a Discord member. You can follow the link in a description. Go and check out. Okay, so thank you so much, everyone. I'm going to finish the webinar. And I hope you enjoy the back testing. And if anybody joined late, then no need to worry. You can watch again later, anytime. Okay, and this is a very simple and easy to trade way, and don't make it complex. Okay. Okay, thank you. Thank you so much, everyone, and have a nice day and have a nice great weekend. Thank you so much, everyone.